Hello students, welcome to day 17 of the Mathematical Theory of Interest course. In today's discussion, we will discuss about the stocks and the financial markets. We will discuss about stocks and financial markets. We know that stocks are basically the investments in the owner's equity, and the financial markets are basically the markets where financial securities are being traded, is called financial markets. Now here are lecture outcomes. In this lecture we will cover the following topics. First of all, we will discuss about the share market basis, then the important terminologies related to share market basis, then how these shares are being traded, then we will discuss from the virtual terminal perspective, then doubt clearing. The share market is basically the market where the shares of different companies are being traded. The buying and selling of the shares is done, just like New York Stock Exchange, just like Nasdaq. Nasdaq means National Association of Securities Dealers Automated Quotations. Why to invest in a stock market? Why? What are the motivations to invest in a stock market? We want, basically there are two reasons. First of all, we want to maximize our returns. Secondly, we want to beat the inflation. We want to beat the inflation. We want to include the time value of money effect in our savings. How to invest in a stock market? Basically, we can invest in a stock through brokers and through dealers. First of all, through brokers. A broker is basically a party that mediates between buyers and sellers. It's the middleman who arrange the transactions, who facilitate the transactions between a buyer of a security and the sellers of the security. A stockbroker or a stockbroker, or we can just call it as a broker, is regulated professional broker who buys and sells shares and other securities through agency firm on behalf of the investors. This is the flow chart. This is very important. This is the flow chart of making an investment or buying some shares through dealers in a stock market. In the first step, first of all, we need to open an account through a dealer. Then after opening the account, we need to contract the broker or sub-broker to continue our transactions. Then the third step, we need a computer terminal with ODI and software. These are some specified softwares specifically used in this different kinds of stock exchange. In every stock exchange, this software may be customized. Then in the fourth step, then we will set up our user name and the password. Then we log in and trade different kinds of shares. After login, we can see different kinds of shares which are being offered for sale and for purchase. Then after buying or selling the shares, then we can simply sell the shares or either buy the shares. Index is basically tells us the true picture of the market. It is basically the mirror of the market. It tells us how the top companies are performing. It is calculated by assigning weights to specific securities, specific top securities, top company securities. For example, New York Stock Exchange Index, just like Nasdaq. Bull market, the market can be divided as bull market or bear market. A bull market is a market trend in which the rates are becoming very high. Then a bear market in which the rates are becoming very lower. They are moving very at a lower level. How the trading terminal look likes? How the trading terminal or how the outlook of the how the outlook of the, we can say that the software will look like. This will be a typical uh, interface of this software. If you want to buy if you open an account, you can see this kind of software, this kind of screen. Then trading terminology, there are different trading terminologies: day versus delivery versus day trading. In delivery trading, when you purchase stocks with the purpose to hold them for more than a day, it is termed as a delivery trading. And if you hold a security to make transaction immediately, that will be known as a day trading. When you buy a stock, buy or sell a stock for intraday with an obligation to square off your position in the market, it is called as, in the same day, it is known as a day trading. The prices are basically there are different kinds of prices of stocks are available: last trading price, last day's price, open price, close price, day high price, day low price, 52-week high or low prices. These are the most important terminologies. Then we have order and trade. Order refers to as bids you are putting on the into terminal. Bids are basically the offering prices, your buying prices, and trade is basically bids which are being executed, which are being accepted. They are called the trade prices. Now in this example you can see how to enter the buy and order. There are different, it facilitates the users to put their bid prices or ask prices according to their requirements. This is another example to enter a sell order. The previous was how to enter a buy order. Now market price, limit price, margin, short selling, short covering, and stop loss. These are some. Market price is the is basically the price which is being available in the market according to the market condition. The market price is calculated, is determined through the demand and supply of the of a particular stock. Then limit price is basically the limit price, the minimum or the maximum price that you intimate your broker to buy or sell this stock if the current market price will touch this limit. Margin is basically the how much margin you have given your broker for trading purpose. Short selling is basically when you want to sell this stock is called short selling. Then short covering, then stop loss. So here are some bases of trading: fundamental basis and technical basis. The analyzing a company account business profits by using the ratios like earning per share EPS, price earning ratio, book value to price earning ratio. These are some basic standardized ratios that we can use to make our decisions. Then we have some technical basis for trading: analyzing the historical prices movements on the charts for identifying patterns in share prices. These are some technical aspects. Now this is all about our today's session. I hope you have enjoyed the lecture. If you have any questions, you can ask me anytime. Thank you so much. See you in the next class. Bye bye.